This episode is brought to you by Suzy, a cutting-edge market research software platform that empowers some of the biggest companies in the world, like Citibank and Procter & Gamble. To find out more about how Suzy can help you stay competitive, go to tearsheet.co/Suzy. Welcome to the Tearsheet Podcast, where we explore financial services together with an eye on technology, innovation, emerging models, and changing expectations. I'm Tearsheet Editor-in-Chief, Zach Miller. And blockchain technology continues to bridge the gap between traditional finance and the digital asset ecosystem. Today, we're witnessing a fascinating convergence where decentralized finance protocols are being integrated into user-friendly platforms, making sophisticated financial tools accessible to everyday users. And one of the most significant developments in this space is the ability to leverage crypto assets without selling them, essentially unlocking liquidity while maintaining exposure to potential appreciation. Coinbase has recently launched a groundbreaking product that allows customers to borrow USDC against their Bitcoin holdings in under a minute, all powered by on-chain lending protocols. I'm delighted to welcome Max Branzburg, Vice President of Product at Coinbase, to discuss this new product. And as a key architect of Coinbase's product strategy, Max has been instrumental in developing solutions that make crypto utility more tangible for millions of users. And today we'll explore how Bitcoin-backed loans represent a pivotal step in Coinbase's vision for on-chain financial services, the technical infrastructure making this possible, and what this means for the future of personal finance. Welcome to the show, Max.
Thanks for having me, Zach.
So let's just jump right in. Tell us a little bit about this new product.
So the product we just launched is Bitcoin-backed loans with USDC. You can now borrow against any Bitcoin that you're holding on Coinbase, and you can borrow USDC up to $100,000 today. You take that USDC, you earn rewards on it instantly within the Coinbase product. You can also take it off the Coinbase product and use it for everyday purchases. And that loan can be made in under a minute instantly with the Bitcoin that you have on the platform. So it's a really interesting and sort of new innovative way to get more value out of the crypto that you're holding on Coinbase. We've had millions of users for a long time that have held Bitcoin that don't want to sell their Bitcoin. They want to stay long. They're invested for the long term, but they do want to have access to liquidity to be able to use in their everyday lives and for regular purchases. And so now using on-chain protocols, and we can get into some of the details there, you'll be able to borrow USDC against that Bitcoin without having to sell it.
Awesome. And you mentioned the fact that you can do this in under a minute. How important was it for speed in terms of building this product?
You know, we're really trying to disrupt what the traditional financial system offers today, and that's one of the reasons that we're building on-chain, and we think that the whole financial system is really moving on-chain. One of the powerful features of on-chain financial services is that they are instant, and they're very cheap or free in most cases. They're globally accessible. Anyone can access them. They're permissionless, and so really delivering on that promise was critical for us, and not only important for the product to be able to serve customer needs so that you can borrow instantly. You don't have to worry about any sort of middleman, any processing, any of the sort of things that you might get stuck with in traditional finance. But it's also the core part of the strategy for why we're doing this, which is we believe that on-chain financial services are actually better than what exists off-chain. They provide more value to customers, and so we're deliberately building with that technology in order to enable those end user benefits.
Before we get into sort of the benefits, I'm curious, were there any specific technical lifts or challenges that you faced in launching this product?
Absolutely. This is the culmination of many years of technical investments in different places. So
right, it takes a lot of work to make it look easy, right?
That's exactly right. Uh-huh. It's sort of like an iceberg. I mean, I think what you see is the very tip of it, but there's a tremendous amount of innovation under the surface, and a few of the key points of innovation over the last couple of years that have made on-chain financial services a reality and culminated in a product like this are one, the blockchain technology itself. So years ago, blockchains might have been too slow to actually enable a product like this, or might have been too expensive to build on. Coinbase launched a couple years ago a layer 2 blockchain called Base. Base is extremely fast, extremely cheap, and enables builders to create products like this one on top of it. There's also been innovations in wallet technology. So smart contract wallets have been a really critical innovation that enables faster, cheaper engagement with blockchains. And so we're utilizing smart contract wallets as part of this product. And then ultimately, the top of the layer, the easiest part in some ways, is building an excellent user experience around that. And with the trust and the security that Coinbase has brought for many years, and enabling it to feel as seamless and easy as the typical Coinbase experience of buying and holding Bitcoin, but now you can also borrow against that Bitcoin. Under the surface, it's building on all of that technology that's been built over many, many years, and we can get into the details there, but the hard work certainly is the least visible work in this product, and it makes it feel easy on the surface.
That's the iceberg you're referring to. I don't want to get too deep into the technical like protocols or anything like that, but I'm kind of curious, like, because there have been lending products on the market before. You mentioned some of these advances in underlying technology. Was there sort of a gating feature of saying like, okay, now we're ready to launch this product because the technology has caught up to it? Like, or what prevented you from launching something like this previously?
I would say the three most important enablers here were Base as a layer 2 protocol that's fast and cheap. The second is smart contract wallets, which enable the sort of abstraction of that layer of interaction with the chain, so it feels as seamless as the core consumer product that people have used for many, many years. And then the third piece is actually a product that we call CBBTC, which is Coinbase wrapped Bitcoin. And that's a product that doesn't show up in the experience anywhere. You don't need to know the technical details of it. But what it does is it enables borrowers to put Bitcoin on the Base blockchain in order to borrow against that through a third-party protocol. Bitcoin historically has not been, you could not use Bitcoin on a blockchain in this kind of protocol. Now with the introduction of CBBTC, which we launched about 6 months ago, you can. And so those three things have layered up to make this possible. And what's interesting, maybe the fourth, is the many number of builders that are creating lending products now on Base has just proliferated as a result of that. So you see each of the pieces coming together. The protocol that we're working with on this product specifically is Morpho, which has built one of the leading lending protocols on Base. There's many others in addition to that, and I think one of the values here, as you see the pieces stacking and you see the ease of use and the ability to distribute to millions of retail customers on Coinbase around the world, is more and more builders want to build competitive products. And that's a good thing. That's the flywheel that we want to spin, where we have great products getting built, we can distribute them to millions of customers around the world. As they take advantage of those products, there are more builders that are entering and creating innovative products, which will create more value for customers. And so we're starting to see that flywheel already spin, and I think we'll see even more of that given the open nature of this ecosystem and the platform that builders can build on.
The financial industry depends on data, but not all data is created equal. Choosing partners who can separate fleeting trends from groundbreaking innovations is more crucial than ever. If you want to unearth what forces are shaping the industry right now, download our guide at tearsheet.co/Suzy. I think it's so interesting because what I'm hearing you say, Max, is like as Coinbase itself matures into like really an integrated financial services company, you're also building stuff at a platform level where third parties are going to be using that as well. And there's sort of like, as you mentioned, this flywheel effect where there is an interplay between the things that you're building, both internally and externally to the whole ecosystem.
Yeah, and this is a really key point, Zach. I do think that financial services as a whole are moving on chain. And I think that Coinbase will become a primary financial account for millions of people around the world.
I see that, yeah.
But it's going to do it in a very different way. It's not going to do it by creating sort of first-party centralized products. That's the way it's been done for many years, and folks have been successful doing that. But the unique enabler of this on-chain technology is that we can tap into a platform where there's millions of products being built by people all over the world with really constant innovation and experimentation in what those products are. We can deliver those products to our customers and spin that flywheel.
How do you then, as a product guy, determine what to build? And what I'm thinking here is like both internally and sort of for the whole ecosystem. I assume there's some unlocking features if you can build at the platform level that benefit you and the ecosystem. But how do you make those decisions about what to build for yourselves and for your customers versus for the ecosystem?
Yeah, I think there are two layers of that. One is really talking to our customers and understanding what our customers' needs are, and the second is understanding where the technology is going and making the really long-term hard investments in the technology that will enable the next set of features. So in this case, this was a combination of both, where we've had customers for a long time that have wanted to be able to get utility out of their Bitcoin. And it's not just customers on Coinbase, but across the ecosystem that have held, there's nearly $2 trillion of Bitcoin out there that people want to get utility out of. It's been hard to tap into that for real utility. That's been a need. Folks have been knocking our door asking for how we can help them with that. And so that's the place we always start is what do people want? How can we solve those needs? But it's also building this platform and really inventing new technology that can enable these types of use cases. So 7 years ago when I joined Coinbase, I had a dream that we would move financial services on chain. We saw the potential that it was possible. People were experimenting with different things, but there were so many barriers to making it a reality. And that was, the speed and friction of the underlying blockchains, the architecture of the wallets, the ease of use and user experience of the user-facing applications. All of these things were barriers to realizing that dream. And so in addition to talking to customers and understanding their needs, we had to make those long-term investments in the underlying technology. And so those are the two places. Today, I hope that we are both serving customer needs that are kind of short-term known. And also, I hope the investments we're making are 2 or 3 years ahead of what's going to unlock the next wave of adoption. That's the way that we try to kind of prioritize across the portfolio.
I think it may be fair to say also that Coinbase is an influential enough institution in the whole ecosystem that what you decide to invest in may define what comes in 2 or 3 years as well. Do you see it similarly?
We really try to build with the ecosystem. So yeah. I think we are one participant among many, and
I didn't mean it in like a nefarious way. I just mean more like an influence way.
Yeah, it's been really rewarding, honestly. Like as we've been much more open and ambitious about our vision to bring financial services on chain and to bring Coinbase on chain, it's been really rewarding to work with that ecosystem and all of the developers and builders that want to be able to distribute to our retail customers. And we've been able to work together in really collaborative ways where, Morpho is a great example. We also just launched a product, Coinbase One, which is a subscription product that we have. We just launched on-chain benefits with 10 partners across the ecosystem. Morpho is one of them, but 9 others also. And it's this really unique product where kind of what you would think of as a standard subscription product. You pay a monthly fee for it. You get benefits in the Coinbase app itself, like zero trading fees and all kinds of things. But now all of a sudden you can take that to any wallet on chain and get additional benefits from 10 partners across the on-chain ecosystem. And it's the sort of thing, like you said, that's really uniquely enabled by building in this open platform. And it's been fun to be able to build with all of these great builders across the ecosystem.
Where are we in terms of consumer adoption? Obviously, we have the early adopters who made lots of money. They're many of the ones who need these lending products. Are you seeing another graduation to like people who are just getting into crypto for the first time, and how do they get started with? I assume by buying and selling. That's sort of like the entryway, and then Can you take us through maybe like an adoption cycle or a user experience in terms of getting new products? What does that look
Yeah,
like?
it's been interesting. There continues to be very strong adoption. There's now, more than 50 million Americans holds crypto, hundreds of millions of people around the world. And historically, certainly the classic adoption curve was buy your first Bitcoin, then maybe you buy ETH, maybe Solana, start to expand kind of into the longer tail of assets, and then start doing things with those assets,
Mm-hmm.
start staking those assets, maybe earning rewards by saving those assets. Now, borrowing against those assets. That was kind of the traditional curve, and that's still an experience that a lot of people are going through. But what's interesting is so much of the utility in crypto is actually coming before the investment use case now. And so it used to be come for the investment, stay for the utility.
Mm-hmm.
And now in many cases it's come for the utility, stay for the investment. And what I mean by that is there's features like payments, for example, global instant free payments. You don't need to be a Bitcoin investor to take advantage of that. Actually, you can onboard, use USDC, which is a US dollar backed stable coin, and you can send it anywhere around the world instantly for free, anytime. If it's the weekend, if it's non-banking hours, overnight, you get that instant payment capability that is not possible in the traditional banking system today. And so we see people onboarding for those types of utility use cases first, and then getting the investment case second. And that's been a really interesting evolution, the way people are coming into the space. We see it moving both ways, and the two positively reinforce each other. But increasingly, utility is being built on chain. Financial services are moving on chain. And so we're leaning into that with products like this one and a number of others in the pipeline.
And do you have products specifically targeting like banking partners?
I think that this move on chain is both facilitated by the bridges that we're building, that Coinbase is building with banking partners. I think it will also be adopted by banks and fintechs. I hope it's adopted by banks and fintechs around the world. Today, one of the great value props of this Bitcoin-backed loan product is that Coinbase enables safe, trusted on-ramps and off-ramps through the banking system. And so it's very easy to get Bitcoin. It's very easy to borrow against it, take USD off the platform and use it in your everyday life. That is in and of itself enabled by deep partnerships with banks around the world. But I do think that the next step in this evolution is, as banks and fintechs see what Coinbase is doing here and our ability to offer financial services like loans through these on-chain protocols, I think they should be doing this also. And yeah. I think that we'll see a wave of fintechs and banks that start offering novel products, whether it's payments, whether it's borrowing, lending, all of these products that are offered on-chain. I think it'll take a little bit longer to adopt. It's a new technology. It requires a new set of capabilities. But I do think that these products will be distributed through many surfaces over time, with Coinbase maybe being the leading one, but not the only one.
And what do you see? You mentioned like them, banks in particular, witnessing Coinbase's success with some of these products as sort of harbinging, their adoption of these things. Will it take a clear regulatory system also? Banks are obviously, risk averse and typically not first movers in most markets. So I guess, what does it take from your perspective for them to start to get more involved here?
Yeah, it's going to require some really innovative thinking in the banks. It is very disruptive to the way banks have traditionally run their businesses, both certainly on the regulatory side, but also just the product and business model is a very different model. Today, banks monetize the assets that they hold for customers. That is the primary kind of monetization model, business model. We are turning that on its head, and we're saying we're actually, Coinbase, not going to monetize those assets. We're going to share those with the ecosystem and leverage an ecosystem of many, many builders that will be able to monetize in different ways. We just want to create the best access point to that. So it's a very different mental model for banks and fintechs from how they've monetized and what their business models have been. I think that I think you'll probably see adoption earlier with kind of fintechs and folks that are willing to take a little bit more risk, and then later with banks. But I do think it will become clear that it is very difficult to compete when you have to build vertically integrated financial products that go through a years long or multi-year long development cycle to deliver to your customers, when other platforms can offer dozens or hundreds of those financial products and see the innovation and iteration of those products every day or every week.
I think that's exactly it, what you're saying.
I think the pace of innovation on chain is just going to be so much faster that the quality of products that end users will be able to access will be so much higher. And at some point, I think the banks won't be able to ignore that. And I think they'll hopefully see the benefit of that and leverage the same technology.
And in your mind, are you seeing sort of a quasi like decentralized but also centralized via the traditional system forms of financial system?
Yeah, I think those terms are going to blur, frankly, over time. And I think
they're very binary, obviously. Right.
This product from Coinbase is a good example of that. I mean, people think of Coinbase as a centralized exchange. This product is really built on decentralized protocols and enabling people to access those decentralized protocols. So I think it is already blurring. I think that there are real benefits to building the bridges into the traditional financial system. So the banking partnerships I talked about, the support and safety and trust that Coinbase provides are really critical. But the actual financial products being built on this decentralized system, I think, is what gives them that power and enables customers to get more value out of them. So I think we are seeing that blurring, and I think we'll continue to see that.
Well, I'm just thinking, we've had a lot of like heads of innovation, heads of corporate venture capital within the banks. So both building their own products internally as well as spreading some of their capital around to invest in next generation companies. I'm just kind of thinking through like how can you imagine a bank doing what a Coinbase does, or like where do they get the technical expertise? How does a bank or a traditional financial institution begin to get involved other than partnering? I can't really see banks, given the, like you said, that year-long cycle of what it takes to get a product out, just to get something approved, let alone build the products, being able to keep up with what you guys do.
I think it is challenging. We see a lot of the banks though that are really leaning into this space and are seeing the potential of it, and so I'm encouraged that they see where it can create value. One of the places that I think banks are seeing the value most clearly is around stablecoins and payments.
Yeah.
This is
custody, I guess, also. Yeah, as part of that.
Yeah. I mean, this is really fundamental innovation that's kind of closer to home for what banks do. And if you think about banks as oftentimes facilitating millions of dollars of transactions across different regions, different entities, different customer types, one of the things that stablecoins is doing is making that dramatically more efficient. So last year, for example, there were $30 trillion of transactions in stablecoins. That was more than Visa and MasterCard combined did last year. And so the
numbers are staggering when you think about it. Yeah.
And so banks are taking notice of this and are leaning into it, not just as a nice to have innovation arm, but because it really drives bottom line for them. It's really core to the strategy. And so I think banks are leaning in. They're trying to figure it out. I think that they will need to certainly bring kind of a different mental model around regulation. It doesn't mean taking more risk. It just means understanding what the space is doing and what it's not, and participating in a place that makes sense for them. I think, staying close, partnering with folks in the ecosystem. I think that, players like Coinbase are doing a lot to support adoption in third-party businesses, not just for consumers. And so we are helping as many people across the ecosystem adopt crypto and enable crypto for their customers as possible. And so I think looking to partners like that and just really staying on the front foot, not as a nice to have, but really as a must have, I think is the right way for the banks to be thinking about it.
Max, we're getting near the end of our conversation today. And one of the things that has impressed me in this conversation is your passion for what you do. And I'm kind of curious, what gets you most excited to come to work every day?
Oh, wow. Well, I am incredibly passionate about what I do. And the thing that brings me to work and a lot of people at Coinbase is the mission, which is we're trying to create more economic freedom in the world. That is the thing that really unifies us. And crypto and this on-chain economy is uniquely enabling that economic freedom. And you can see it in this product in particular, where suddenly people can have access to thousands or millions of different financial products that weren't possible before. And on the other side, builders can create these financial products from anywhere in the world and distribute them to anyone globally. And so I think that financial freedom, the way that we're enabling people to access new, better financial services faster, cheaper than they could otherwise, I think that economic freedom is going to create tremendous value. It creates better life outcomes, better health outcomes, happiness and fulfillment and prosperity. And so I'm really excited about that mission that we're building towards. And I think in particular right now, we're at this unique moment where financial services really are coming on chain. And Coinbase is enabling that transition. And so we can see the value that it's creating for our customers and for businesses around the world every day. So it's an exciting time to be in crypto and at Coinbase.
I feel like I want to say amen to that. Max, it's been great talking to you, and it's great learning about this new product. Thanks for joining us on the Tearsheet podcast today.
Thanks so much, Zach.